this podcast, I bring you an educational video. So this is going to be a quick one, but it's vitally important. So before you decide to go watch some other YouTube video, this is important, especially for you as a trader. This is going to help you out massively. So I'm about to open your eyes, make you see something you might have never seen before, right? So this was for me one of the key moments in my trading career where I totally stepped up my game and I saw something that majority of traders miss, and they will miss for most of their lives until they actually quit. So what you don't want to be doing is quitting, and what you actually want to be doing is continually refining your approach, continually refining your strategy, continually searching for the things that work and eliminating the things that do not work. So to have a trading system that is efficient, you do not need a lot of things. You just need a couple of simple things that work. All right. So the first thing that I always speak about in most of my videos, I speak about price action. All right. So what is price action? Price action in simple terms is the directional bias of a financial instrument or a financial asset. Right. So whatever it is that you're looking at, I'm looking at a forex or a foreign exchange market, right, or forex market, and I'm looking at the US dollar versus the Canadian dollar. So what is the price action in this case? The price action is actually bullish. You guys can see that the US dollar is actually gaining momentum against the US dollar CAD on this 2-hour time frame. Of course, I call it a 2-hour time frame, but doesn't essentially mean that the entire structure of what I'm looking at is 2 hours. It's actually probably weeks and months old. All right. So each candlestick in this price action indicates 2 hours. That's what the 2-hour time frame actually refers to when it says 2-hour USDCAD. All right. Each candlestick represents 2 hours. All right. So what's the first thing I spoke about? I spoke about price action. Price action being the directional bias of the market. If you look at this entire structure, I think a high school kid would be able to tell you that this market is moving up and not down. So what you want to be doing in such a case, you want to be looking for buying opportunities only. Why are you buying? You're buying because the instrument is rising in value, right? So this is a positive indicator, meaning you should be buying. And if you are buying, you essentially set yourself in a position to make profits, right? So what do you want? You want the buck. You want the buck, and that's where the money is. The market is moving up. You want to be moving up with the market. You do not want to be moving against it. Where do you lose money? You lose money the moment you try to find areas like this where you can sell the market and try to be essentially win the jackpot. There's no jackpot here. All right. The only jackpot is if you trade in accordance to what the market is doing, right? So you want to be following the market direction. So that's the first key point. So note that down. Do you want to be trading in sync with the market trend, right? Another key word I can use is the trend is your friend. So that is the golden rule in trading. The trend is your friend. You want to be trading in sync with the market trend. That's where you'll be making most of your money. That's where you'll be making majority of your profits. Okay, but then I said I'm going to show you something you might have never seen before. All right, this is going to be a game changer for you. And I assure you, 9 out of 10 of you may have likely never seen this or noticed it before. All right, so I'm giving away one of my biggest secrets to profitable trading. So take note to this. If you can, come back, rewatch this video time and time again. Okay, so we look at USDCAD 2-hour. We ask ourselves the prior question or the first question, which is the first principle. What is the price action? The price action in this particular market is bullish, right? So that's step one. What is step two? Step one essentially indicates that we are looking only for buying opportunities, right? Because the market is ascending, it's not declining, it's rising in value. So if something is going up in value, you want to be buying it, you don't want to be selling it. You want to be selling it if it's going down in value. Okay. Okay, so what else I want to show you? Something else I call phases, or I call the 2 stages in the market, right? So markets are at any given time are doing one of 2 things, right? And if you understand this, I assure you your trading is going to change, and it does not matter what instrument you're trading, right? I'm trading the foreign exchange market. You could be trading stocks, indices, Bitcoin, or cryptocurrency. You could be trading bonds, a whole variety of markets that are available, right? Stocks, indices, bonds, cryptocurrency, foreign exchange, metals, precious metals. whatever it is, indexes. You could trade whatever you like. The principle still applies. It stays the same as long as you've got a chart, you've got candlesticks, or right, or you've got a visual indicator of price, right? Something that can show you whether price is going up or price is going down. Then you should be able to do this. And then, okay, what is it that I want to tell you? Right. So that's the big question. What is it that I want to show you that's going to change your game, your trading game forever, and make you a profitable trader, or set you up to becoming a profitable trader, provided you follow the first step that I spoke about, this price action. You're going to buy a market that is going up or sell a market that is essentially going down. Okay. So I spoke about two phases. The market moves in two phases. At any given time, we know that the market is either going up or it's moving sideways. Right, so we've got two phases. The phase one is what we call an impulse. Phase two is what we call a correction, or in other words, a retracement. Right, so keep note of that. Phase one is a correction. Phase one is an impulse, and phase two is a correction. Right, so think of it like a staircase. Right, if you are ascending a staircase going up to a very high building, there is no way you can climb up that building with a linear progression. You essentially move up, sideways, up, sideways, up, sideways, in order for you to have balance and in order for you to be grounded so that you do not fall, you do not slide off, etc., etc. So you've got a staircase that essentially leads you up somewhere, or you've got a staircase that essentially leads you down some. So you've got something like this if you're going down, and if you're going up, you've got something that looks like that. Okay, so I speak of these two phases. One is your impulse, the other one is what we call a correction. So you want to take note of that, you want to remember that. Right, so what is a correction? A correction is a retracement, and what is an impulse? An impulse is basically a sharp directional move in the market, right? So something similar to that. You will notice in every market you get price action that looks like that. And in those areas, those are the areas where you will be making most of your money, or you'll be losing most of your money if you do not understand what that essentially means. Right, so those are what your impulses will look like, and I will show you just now what a correction will look like. So your impulses will mostly look like that, where the market is essentially trending upward or trending downward, but in a sharp and strong manner, right? So usually impulses take shorter time periods and corrections take longer time periods, right? You guys can see the market is essentially ascending, it's going up. So we are only looking for buying opportunities. At no point in time should we be looking for selling opportunities in the market that is ascending. Okay, so what is the first phase I spoke about? I said phase one is what we call an impulse. Just forgive my handwriting. First phase is what we call an impulse. That is always phase one. And phase two, or stage two, is what we call a correction. So you guys might know this as a retracement. Correction just sounds a little bit more sophisticated. That's basically the same thing. All right. So I said at any given time, the markets are doing one of two things. We're either trending up in an impulse, or we are moving sideways in what we call a correction. At any given time, this is one of the two things the markets are doing. So you should be able to identify where we are in the market. And if you understand where you are, right, either in phase one, which is a correction, if you are in phase one, which is an impulse, then you know phase two will follow, which is a correction. And if you are at any point in phase two, then you know what follows will be phase one, which is an impulse. So these two follow each other like day and night. This is something you should remember, right? This video will be up for you so you can come revert to it again and again and again and look at different charts and see on live markets that are moving. You will see for yourself that this is actually what is going on in the markets, right? So at any given time, we might be in phase one, which is an impulse, or at any given time, we might be in phase two. So your job as a trader is to identify where we are That's what you want to be doing. That's your primary task after you've identified your price action. What is your price action? Your directional bias. Are we bullish? Are we going up? Or are we bearish? Are we going down? If we are bullish, we're only looking to buy. Only looking to buy. Remember those words. And if we are bearish, we are only looking to sell. Never try to buy a market that is selling. Never try to sell a market that is buying unless you understand a more advanced way of trading. And that is something else that I teach in my master key system. But for educational purposes, in a bullish market, only look for buying opportunities. In a bearish market, only look for selling opportunities. So in this case, we are in a bullish market, right? Bull means buy only. We are only looking for buying opportunities. So buy only. That's what you look for in a market that is bullish. Okay, moving on. So what is your correction and what is your impulse? Okay, I think I spoke about that. I showed you what your impulses look like, and I've shown you, now I need to show you what your corrections look like. So your impulses are something that looks like that, something that looks like that, something that looks like that. It's a strong, sharp, directional move, either up in a bullish market or sharp and downward in a bearish market, similar to what we have over here. So that is a bearish impulse, and the ones we've got in red are actually what we call bullish impulses. The market was bullish over there, give us a nice impulse up. The market was bearish over here, give us a nice bearish impulse down. Okay, but the overall structure of this market is bullish, so we're only looking for buying opportunities. So we do not change our mind, or we do not change our opinion on that unless proven otherwise. So I've shown you what your impulse looks like. Now I'm going to show you what your correction looks like. So I said the markets are either trending or sideways at any given time. So that's one or two of the phases that you will have, right? So we're either trending up or we are essentially moving sideways, right? And I said, with regards to that move in red, that's what we call an impulse. And the second phase will essentially be what we call a correction, which is this over here. And that's when the markets tend to look like this. They look like they're moving sideways. So if we know phase one is followed by phase two, which is a correction. Phase one, which is an impulse, is followed by phase two, which is a correction. What is more likely to happen next? Well, that is self-explanatory. The answer would be phase one will follow. We will get another impulse in the direction of the price action that we have identified, of course, which is bullish. We're only looking to buy. And at the completion of that correction, what is likely to happen next? We are likely to get the market moving sideways again. We are likely to get the market moving sideways again. So the price action would look like that. It would look slightly messy, but that would be our phase two, which is a correction or a retracement. So at any given time, one of these two things are happening in the market. So you're either in phase one, which is an impulse, or you're in phase two, which is a correction. Right, so how do you identify a correction? How do you identify an impulse? Impulse, like I said, in red over here, and I showed you in red, I've showed you in red over there. Your impulses will look sharp and directional, and your corrections will look more sideways and messy. Not Lionel Messi. Anyway, so your price action in a correction would look a lot more. Let me use a different highlighter. Okay, I'll use green. So your price action in a correction will look a lot more like that. It will look a lot more like that. A lot more like that. A lot more like that. All right, let me just clear this stuff up so you guys can see clearly. Okay, so I said phase one, impulse, phase two, correction, followed by impulse, followed by correction, followed by impulse, followed by correction, followed by impulse. So this is a never-ending cycle. right? Phase one will be an impulse. Phase two will be a correction. Phase one will be an impulse again. Phase two, a correction. Phase one, impulse. Phase two, correction. Phase one, impulse, etc. Phase one is followed by phase two. Phase two is followed by phase one. It's as simple as that. So that's what you're going to be on the lookout for. Okay, I'm just going to move this chart just a little bit over there. Okay, looking at the price section that we have, what could we consider an impulse? That area over there is a nice sharp directional to the upside. That could be phase one for us. That is what we call an impulse. And what could be phase two? Phase two is that correction that I was talking about. So the price action looks sideways and messy. So that will be our phase two, which is a correction that follows the phase one, which is an impulse. And then what would come after phase two? At the completion of phase two, of course, we will get what we call an impulse. That's phase one again, just like I've illustrated over here, followed by what we call a correction, which is the sideways looking price action. And we have labeled that as phase two. So that would be phase two. This is where we're at, followed by what we call an impulse again. Right, so this is like night and day. It just follows each other. So you've got to be able to identify the stuff, followed by some sideways price action, which would be phase two again. That's where we are. We did phase one, followed by a nice bullish move to the upside again, which is another impulse, followed by another correction or retracement sideways, followed by another impulse up, which is the last move that we have based on the data that we are currently looking at. All right, so you guys can see that's up, sideways, up, sideways, up, sideways. So you got to train your eye, you got to train your mind, your brain to see these things, to spot these things. Then if you understand these things, eventually you get to a point where you know what's going to happen before it actually happens. So when you can identify that an impulse has just happened, you're able to identify that a correction will likely come. If you can identify where the correction will end, then you can actually buy the market there. And as soon as the impulse comes, you make profit. Another correction will follow, and you continue to buy, and you make profit. Another correction follows, and you continue to buy, and you will make profits. Another correction will follow, which is sideways, messy looking price action. Another impulse will come, and you will make profits, provided you have bought at the correct spot. That's all you need to train your mind to do. And I've given you another reason to not be selling markets that are rising in value, because you will be losing money. The moment you think, like majority of traders, 90% of traders, they will claim this is a double top. They will claim there's some, I don't know, some wall to heaven that is stopping this price from proceeding up, and they will try to sell this market. That is the moment you lose money. That is the moment you lose money. So you don't want that, because you will be selling there thinking, okay, there's resistance. There's no such thing as resistance. And I say this all the time. Resistance does not exist. Support does not exist. So if you're selling here, I'm sorry to say this, but you are a fool. And the people that have taught you that resistance and support is real and it works, they're fools too. So do not follow any of that nonsense. There's no such thing as resistance. There's no such thing as support. And another thing is, if majority of traders are selling resistance or buying support, and you know majority of traders are wrong, then you need to really think about it. Think if what you're doing is what majority of people are doing. And if it continues to give you the results that you don't want, then you will know that you need to actually be doing the opposite of what most of the guys that call themselves traders are doing. Why? Because you will be selling there and the market will rise. Then you'll blame the government, you'll blame the bank, you'll blame your broker for manipulating your trades, you'll blame the market maker, etc., as if there's some ghost that's manipulating your accounts. and there's no such thing. The only thing that is hindering you is your lack of understanding and, yeah, essentially ignorance. So you do not want to be ignorant. You want to study, you want to practice, you want to learn from the people that understand these things, and you want to grow and become better as a trader. All right. So coming back to what I spoke of, seeing where we are, I spoke of price action, meaning what is the directional bias of the market. In this case, we are looking bullish. So we are looking for buying opportunities, and the market is essentially going up. So you identified your price action. Bullish means buying opportunities only. Buy or bull. Right. Essentially the same thing. So you're only looking for buying opportunities. Then I said, one of two things are happening in the market. There's two phases, or there's a sequence that the market follows. Phase one will be your impulse. Phase two will be what we call a retracement or a correction. So that's where the market is moving sideways, followed by an impulse. That's where the market is sharp directional, followed by what we call a correction. That's where the market looks messy, it looks sideways. So as soon as you can identify that, then you will know what comes next. And what comes next is an impulse. So if you know that, then you're able to anticipate this. You're able to buy there. And as you buy there, what happens? You guys can see for yourselves. The market is essentially moving up nicely. The market is moving up nicely, and then you can eat your profits and make whatever dollars you need to make for the day or for the week or for the month. But that's something that I wanted to show you, and I would suggest that you come back to this video and watch this over and over again and go over it and practice it and practice it and practice. Of course, you will not know exactly where to buy. You will not know exactly where to sell in a bearish market, but this whole idea will keep you from getting in the wrong trades. And it will keep you trading in sync with the trend, which is the golden rule. Do not forget that. And also you'll be able to identify exactly where you are in the market, and you'll be able to identify what is likely to come next. So when you know this is like a staircase and you're going up a really tall building using a flight of stairs, it's up, sideways, up, sideways, up, sideways, up, sideways. Or if you're going down in a bearish market, it's the same thing. It's down, sideways, down, sideways, down, sideways. So it's impulse, phase one, correction, phase two. Impulse, phase one, correction, phase two. Just like we have the impulse, phase one, correction, phase two, impulse, phase one, correction, phase two, impulse, phase one, correction, phase two. It's actually the phase two, impulse, phase one. So that's a full impulse over there. Correction, phase two, meaning you want to be buying here. How do we determine exactly where to buy? I talk about that stuff in my master key system, so I can tell you exactly where you need to get in the market and where the market will turn. That's something else that I teach. If you're interested in that, get my master key system, purchase a copy of my book. It's in PDF form, so I transfer it to you immediately. And I've also got one-on-one lessons on the system and the principles that I teach. So you can get access to that as well. But I will show you now that I'm in this particular trade. I took it, I went long. So I'll show you just what this would look like for me. Okay, so around there, I would have bought this market. My profits would be around the price of 1.39500 for my take profit, and my stops would be the price of 135,500. So if you see there, my risk to reward ratio is just a little greater than 2.76. So for every $1 that I'm risking, I stand to make at least $2.76. So if I risk $10, I stand to make $27.60. If I risk $100, I stand to make $276 US. If I risk $1,000, I stand to make $2,760 US. That's what the numbers would look like. If you risk $1, you make $2.76. All right. But that is the position that I currently have. My pro signals member have it. I've also sent it out to the free group as well. So if you also would like to get some of these trades, I do send them out for free. I do send out paid signals as well. So for every one trade that I send out free, I send about 2 to 3 in my my pro signals group. All right. So you're winning with 1 for free, or you're winning with 3, and at the end of the day, or at the end of the month, then you've averaged yourself about 2,000, 2,500, sometimes 3,000 pips. But yeah, that's that. I will show you the particular trade so you do not actually assume that I'm bullshitting or I don't know what I'm saying. I do know what I'm saying. I take actual trades on what I teach, right? So I trade what I teach. I don't just speak it. I don't just say things out of sequence. This is stuff that I've studied. This is stuff that I've been learning for nearly a decade now. And I know the stuff works. I know the stuff works. It works. I teach what works. I know the other guys that essentially pick stuff up out of YouTube and they tell you this and that and the other, and they tell you of what do you call it? What's the saying? The golden goose that lays the golden eggs. They tell you of such things, and then when you actually try it and you actually apply it, it doesn't work. Right? They'll tell you of support resistance, and they tell you RSIs and stochastics, and they tell you the market is overbought because the RSI shows that, etc., etc. And when you actually apply it, it does not work for shit. So you do not want that for yourself. You do not want that for yourself. So yeah, actually, let me go ahead show you the trade that I took. So this USDCAD, we took the trade today at the price of around 137. So around that area, we are currently at profit with about 55 to 60 pips. And I'll show you just so you guys see for yourself. And I said take profit will be at the price of 139,500. That's where we're heading to. And as it stands, we are currently in profit. So that's a positive telltale. Okay, so that's my Telegram. Some of the charts that I sent, some results, USDCAD, but I want to show you the actual trade, not the chart. Okay. Also, I've got a copy trade system. So if you want to mirror my trades automatically, you can follow my link on my FX choice. You can copy my trades. These are some of the trades that I have running. Okay, so that's a testimonial from a client of mine, Pro Signals member. She says she's buying me lunch with some of the profits that she's made. But yeah, okay, she doesn't seem to have used the CAD. So let me show you on one of the accounts that I'm running. Okay, so this is one of the accounts that I'm running. And if you look closely there, I've got USDCAD at the price of 136,957. That's where I bought. So I bought the trade, so it's currently running a profit. I don't want to show you the actual signal that I sent. Okay, there we go. That's the actual signal that I sent. So buy USDCAD at 1.37, stop loss at 1.355. And I've got take profit at the price of 139,500. 139,500. So that's that. We're currently up 55 pips. Stop loss, I said, at the price of 135,500 and take profit at the price of 139,500. So you guys can see this is an actual active chart that is running. This is actual time, the time zone. It's 32 minutes past 1 the afternoon in Johannesburg. So if you want my pro signals, you can get in touch. If you want free signals, you can also get into the free group. If you want to copy my trades automatically, follow the link to my FX choice. If you are interested in learning the stuff, which is what I would suggest, instead of getting fish from me, I would rather teach you how to fish so that you can be independent and self-reliant. So that is another option that you have. All right, I will speak to you guys soon and I will give you an update on how this has performed.